Welcome to this edition of Energy Frontiers, and we say thank you to the African Energy Chamber for their support of the show. I am Justina Okechukwu. Now let's get started with some energy news from here in Africa and around the world. Impending strikes at key Australian liquefied natural gas sites led by workers at Chevron and Woodside Energy Group, who are campaigning for improved benchmark pay and working conditions, could jeopardize about 10% of the world's fuel exports and cause a potential energy price shock across Asia and Europe. European natural gas prices had jumped almost 40%, and analysts say that the bullish momentum would persist over the coming months. International oil giants Eni and British Petroleum has awarded 2 new contracts to Italian multinational Saipem for a floating LNG unit to be installed offshore the coast of the Republic of Congo. The project contract is worth around $700 million. A new shipment of Russian crude, the Nissos Tinos tanker, is on the way to Ghana's Tema port and is expected to reach the West African port by the end of the month, following delays in the offloading of the first cargo due to security concerns. Tullow Oil plc says that secured regulatory approval from the government of Gabon for the extension of several of its licenses to 2046. The London-listed explorer explained that the license extensions will increase the value of its resource base and add some 5 million barrels of reserves into its inventory. In Nigeria, San Leon Energy plc, an independent oil and gas company, has announced a fresh investment of $5 million in Energy Link Infrastructure Limited, which owns the floating storage and offloading vessel for the OML-18 oil and gas field. State-owned Moroccan Agency for Sustainable Energy, MASEN, has launched the third tender for a 400 megawatt solar plus storage Normidelt project. Deadline for submission is set for October the 20th. And that was a snapshot of your energy news headlines. When we return, we take a look at how the global oil markets is performed during the week. This is Energy Frontiers. The rising oil prices are having a mixed impact on the global economy. The high prices are boosting energy profits and helping to offset some of the impact of inflation on one hand, while on the other hand, the hopes of a soft landing could begin to fade and prompt the US Federal Reserves and other central banks to continue with interest rate hikes. In the meantime, OPEC says it expects global oil demand to grow by 2.4 million barrels per day in 2023 and by a healthy 2.2 million barrels per day in 2024, reaching about 104.25 million barrels per day. Here is my conversation with Abhi Rajendran, head of global oil and downstream markets at Energy Intelligence, a leading energy information company. Now, so Saudi Arabia's cabinet on Tuesday said it reaffirms its support for precautionary measures by the OPEC Plus to stabilize the market. So with Russia and Riyadh extending their production cuts into September, how is the global oil market currently faring?
First, thanks for having me. It's a great question. I think, the market was a little bit overly pessimistic, a couple of months ago. And it was just sort of waiting for demand to pick up, right? The seasonal pickup in demand that usually happens in June, July, August. Also, there was a lot of supply, including from other OPEC sources. First, Russia's supply was not falling yet. And there was also a lot of supply from Iran and other sources. So the market was definitely, kind of pretty well supplied. But of course, the June OPEC cut meeting plus the additional cuts from Saudi Arabia have changed the picture. But so has demand, right? Demand has definitely picked back up. U.S. demand is strong. You've had seasonal pickups in demand, and in other places, Chinese demand has been okay, but that's been offset by your seasonal strength. So the oil market, I think, is in a pretty fair spot right now. I mean, I think when all the different sources align on the supply and demand side and fundamentals tighten, I think that definitely supports an oil price that's sort of in the mid 80s for Brent. And of course, the other thing that's also helped the last couple of months is just generally the global economic sentiment has also improved, right? So there's been more the belief that Western economies, especially the U.S., will be in more of a soft landing than a recession. Europe is in a pretty weak spot, but generally, there's this belief that the global economy will be okay. It's not headed for any kind of a crash, and that's also helped. So I think the market is in a pretty good place right now. Back to your question, I think OPEC Plus wants stability. They don't want prices too low, of course, and they also don't want prices too high because that causes other problems. So I think an oil price that's in the 80 to 90 range is something that definitely checks that box from a stability standpoint. So I think the market is quite well balanced. It's in a decent place, and I don't think prices are too high for consumers right now. So that's kind of where my summary of where I see the market.
Right. So how do you anticipate the decline in China's exports and imports and the general economic performance will impact oil prices in the near to medium term following the recent data?
Yeah, I think the momentum has been positive, right? And I think the sentiment is still good. So I would not be surprised to see oil prices touch 90 or go into the 90s. I mean, they already went, to 87, 88 for Brent, right? So they're already pretty close to that. I wouldn't be surprised to see a little bit of, further upward momentum, especially as we kind of realize that, central bank tightening and, the interest rate cycle is now, pretty close to over, more so in the U.S., maybe a little bit longer in Europe, but certainly the U.S. But I do think, to your point, I think China has very high levels of inventories and stocks that they built up in the first half of this year. So I think Chinese buying will be one of those things that caps how high prices could go. I think you're going to see this theme of reinflation more broadly be something that the market focuses on and talks about over the next 3 to 6 months. Right now inflation is coming down, which is good, but I think there are drivers that could see inflation kind of creep back higher. Later this year and into early next year. So I think that's something to think about. I also think OPEC Plus doesn't want, prices to go back to, 100 plus and then, cause more economic problems, because I think if we go to 100, 110, I think we'll end up back at 70 or below after that. So again, stability is something that they want. So they also don't want prices to go, too wild to the upside. So I think if prices go to 90 or into the 90s, I think that's probably where they will sort of pause. But I think, there are, again, these factors that will keep prices that kind of pull them back more to the 80s over the next 3 to 6 months. I think 80s is a good level that works for everybody, for suppliers and producers and for consumers as well.
Right. So while this is affecting, might possibly affect consumers, what policy strategies do you think governments can adopt to mitigate the impact of rising oil prices?
Yeah, I think, with oil prices in the 80s, I don't really expect to see a whole lot. I think consumers can handle it. Emerging markets are generally doing quite well. I think of countries like India, Southeast Asia, even Africa, Middle East, I think they're doing quite well. And I think, $80 to $90 oil, and then conversely, what that means for gasoline prices, for other fuel prices, I think that's something that consumers can generally handle. I don't think they need a whole lot of, sort of government and, subsidy support. So I don't expect to see much here. I think it's really when prices start going towards 100 and above, that's when you start to see more of this, right? It becomes more of a pressure on consumers. Governments are pressured to, feel like they have to do something. I don't think we're going to go there. The one other factor that I, didn't, elaborate on earlier is that, last year when oil was at 100, 110, 120, and even higher, there was a concern that we were going to run out of supply, right? Because everyone thought Russian oil was going to go down. Yeah. There was less, OPEC plus spare capacity. We were worried that, we were basically just going to sort of run out of supply. That's not a problem anymore, right? OPEC plus has, over 5 million barrels a day of spare capacity. There's still oil flowing pretty freely from places like Iran, for example. There is still growth coming from the Americas, both North America and South America. I just think you don't have to worry about supply anymore. So that's also going to, limit how high oil prices can go. So I don't think consumers have to worry. And back to your question, governments have to worry quite as much as they did last year when we were in the early months of the Ukraine conflict and worries grew from there.
Right. So lastly, let's just wrap it up here. How, as the week draws to a close, what's your outlook for oil prices? And secondly, what are some of the key indicators that you market analysts are looking at?
Yeah, I mean, look, we're still in, early to mid-August. We're still not quite done with the summer. Especially in the month of August, a lot of traders are, on vacation, on holiday, so you tend to have, light volumes, you tend to have, less trading. And so I actually generally think that the positive bias that you've seen in markets recently will continue in the next couple of weeks. I do expect oil to touch 90. But I think when everybody kind of comes back from their holiday at the end of August and early September, there's more activity, more pickup. I think that's when people will start to, sharpen their focus more on fundamentals. What's happening with demand is the global economy really okay? I think also once you get to September, October, demand will peak for the year, right, and start to come down. And then you also have to think about, okay, when does Saudi Arabia start to bring supply back? Because there's no shortage of oil. It's just, it's just a deep OPEC cut that's tightening the market. So I think in September, I would say, I think there'll be more focus on fundamentals. Fundamentals will not be as strong in the fourth quarter as the third quarter. So I do think that whatever high the prices get to, they'll come back down to some degree. I think a good number to think about for the fourth quarter is, somewhere in the mid 80s for Brent. So I think the next couple of weeks you could have higher prices, but then I think once things settle down, they'll come back down to some degree, but still be in the 80s. I don't think oil prices are going to be running to 100 over the near term.
Coming up, the call for a mix of nuclear and renewable energy is increasing by the day as energy poverty remains elevated in Africa and around the world. More on this when we return.
Imagine a future where tomorrow's solutions build a world of opportunities for all, and where human potential is truly realized, where every child has an equal chance in life, no matter where they were born. Imagine the potential of a continent built on low-carbon oil and natural gas and abundant renewable energy. Imagine Mozambique, Angola, Nigeria, Uganda, Senegal, Egypt, Namibia, and Algeria being let free to develop their natural resources without pressure from wealthy countries to leave it in the ground. Imagine an Africa where we cut red tape bureaucracy and provide better fiscal terms so we can compete globally for energy investments. African Energy Week is the African Energy Chamber's annual event held at the Cape Town waterfront, uniting African energy leaders, global investors, and executives from across the public and private sector for 4 days of intense dialogue on the future of the African energy industry. Showcasing the latest technologies and innovations to 5,000 plus registered delegates from over 100 countries and international professionals from across the global energy sector. Be part of the future of the energy industry and join the energy movement by becoming an official sponsor, exhibitor, delegate, or partner. African Energy Week.
Welcome back to the program. Now, some experts has asked governments around the world to pursue their nuclear aspirations alongside renewable energy options in order to achieve the twin goals of socio-economic development and consistent electricity supply. So I chat to Princess Mtobeni, who is the founder of Africa for Nuclear, a Johannesburg-based company, and she told me how countries in Southern Africa are looking to diversify their energy mix using nuclear power. Now, Princess, explain to me how nuclear energy works and what impact it has on regional energy landscape of Africa.
Thank you so much for that question. What nuclear energy is, it is largely obtained from uranium, which is one of our mineral resources here in Africa, actually. Namibia holds 10% of the world's uranium. We also have uranium mines in South Africa, also in Botswana and in Tanzania, among other countries. So what happens is that we take the uranium as raw as it is, then it gets converted. We convert it to what we call uranium-235, which is now easily splittable. We do a process called fission. We take the uranium, once it has been converted and put into what they call the fuel elements in a form of pellets. Then we get those fuel elements back in South Africa, because South Africa is currently the only country in Africa with a commercial nuclear power plant. It is called Koeberg Nuclear Power Plant. So we take that uranium uranium fuel elements, and then we put them in a reactor. A reactor is something that we can easily call a pot where we boil maybe water, I can say that. It's almost a similar process as when you burn fossil fuels in order to generate electricity. So, but in this form, we take the uranium, we put it in the reactor, and then a process called fission, where the uranium atoms split happens. And then as that happens, it generates a lot of heat. Then we take that heat, and generate electricity in simple terms, yeah. And then the impact it has in the region of Africa. Since Africa is currently the only one with a commercial nuclear power plant, I can tell you, Justina, that our nuclear power plant here in South Africa, called Koeberg Nuclear Power Plant, generates the cleanest electricity, and not only clean, but also is a base load electricity. When we talk about base load energy sources, those are sources that supply you with electricity 24/7, really, uninterrupted electricity supply. They are not weather dependent. And then another impact that I think it can have in our region is that because currently Africa has over 400 million people who are without access to electricity. And you look at the manner in which African nations are underdeveloped. And for me, I think the development would start by solving this energy poverty, because we want to attract investors. And in order for us to attract investors as the continent, we need to assure them the uninterrupted supply of electricity, because no one wants to invest in a country where they will not even have access to power.
Now, let's bring this back to Southern Africa. How can the countries in the region diversify their energy mix using nuclear energy and taking advantage of partnerships? You spoke about investments in order to explore the possibilities.
One thing I always advise our leaders to do is that when you plan for energy, you can't do it in isolation. I think the reason that we are at the stage or facing the energy crisis or poverty that we are facing as the African continent is because everyone wants to plan for energy in silos. It doesn't happen in Europe. If you go to Europe, their electricity, they are fed into what they call power pools. If Germany does not have electricity, they get it from France. If France doesn't have the electricity, they get it from Poland. That's what is happened. They have power pools. They're feeding into power pools. And so what I advise our leaders on the African continent is to also plan their energy in regional power pools, which they have been separated by the African Union, like Southern region power pools, Eastern northern, western, and so that at least we know that when it comes to having each other's back in terms of electricity supply, it happens currently. A few countries in Africa, especially in southern region, they get their electricity from South Africa. South Africa, which is also facing their own electricity problem. And so I think that's what can happen. And Justina, taking into consideration, and when it comes to nuclear, countries like Namibia, they have a lot of uranium. South Africa has uranium. Tanzania has uranium. Botswana has uranium. Imagine if those countries would make use of this very important mineral resource and start planning and in building maybe just one big nuclear power plant in the southern region. We would really achieve a lot in terms of development.
Finally, preparations are in full gear as the African Energy Week 2023 draws near. The conference will be hosting a dedicated session with stakeholders to discuss the role of the African Continental Free Trade Agreement and how countries and companies can leverage the agreement to facilitate investment and development on a much larger scale. Also on the lineup is a Youth in Energy Roundtable, which will explore strategies for enhancing the participation of youth in energy and serve as a discussion to empower young Africans in their advancement in the energy industry. The African Energy Week will be holding on October 16 to 20 at the V&A Waterfront in Cape Town, South Africa. You can find all the information you need at www.aecweek.com. And that's all we have for you on the show this week. Thank you everyone for watching, and remember to follow the program on Frontier Africa Reports website, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu, and I'll see you again.